Meanwhile, central banks around the world are taking different approach to monetary policy to counter inflation pressures. Swiss National Bank, also known as SNB, became the first major central bank in the world to cut rates. Well, the key driver for the SNB's action appears to be a sharper than expected fall in inflation and a strong Swiss franc. Swiss inflation has been below 2% since June 2023 and currently sits at 1.2%. The strong Swiss franc, which has appreciated over the past year, is another factor influencing the SNB's decision. While it helps limit inflation, it also weighs heavily on Swiss exports. The bank anticipates further rate cuts this year to support economic growth. The Bank of England, on the other hand, left its key rate unchanged at 5.25%. However, with UK inflation falling to a 2.5-year low of 3.4%, the bank is expected to signal a potential rate cut in the coming months, possibly as early as May. Meanwhile, the Bank of Canada remains committed to its quantitative tightening program. This program aims to reduce its holdings of government bonds, thereby removing excess liquidity from the financial system. Governor Ton Gravel confirmed the bank's intention to continue QT until its target settlement balance, which ranges likely sometime in 2025. Now, the actions of all these central banks highlight the diverse approach being taken around the world. While the SNB cut rates and the BOE hints at easing, the Bank of Canada remains focused on tightening. The US Federal Reserve, for instance, also kept rates steady recently. Now, each central bank is monitoring its own economic data and adjusting its instruments accordingly.